There's people out there right now who think we're in a real estate bubble or even a super real estate bubble. If you own real estate right now and you're convinced of this, doesn't it make sense to sell your real estate in this housing market? Go ahead and rent somewhere, keep your powder dry so that you can rebuy in the market after everything's crashed. We're going to run through 4 questions you need to answer before you do this very thing. Hey there. Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers make the best decisions during these crazy days. Is the housing market about to crash? Let's go through the facts we do know. We've seen incredible increases year over year in value for homes, 15 to 20% year over year. This is unsustainable. We've also seen recently a slowdown in the year over year increases. So we can see that this trajectory is slowing down. If these values continue to slow and we get to the point where values start to go backwards, there may be an opportunity to jump into the housing market crash and rebuy at a discount. So the first important question you need to answer before jumping in is, what are you trying to gain by selling, renting, and buying? And you need to be specific. Is there a certain dollar amount? For example, you want to sell, rent, buy a home just like the one you sold and have $250,000 in the bank? The more specific you can be, the better. And it may not all be about putting money in the bank. It could be about downsizing and timing that up. It could be about moving into a bigger home and timing that up. It could be about building something new. You need to figure out exactly what it is you're looking to gain by doing this and figure out exactly what level of profit or where you want to be, where you want to end up, what the end goal is. While this seems obvious, too many people get all excited and wrapped up into the idea of the housing market crash, and I want to go ahead and profit from this, that they don't figure out a strategy to actually profit from it. Let us know in the comments below what your answer is to number 1. What specifically are you looking to gain with this strategy in a housing market crash? Number 2, another important one is, where are you going to go after you sell? So definitely start working that into the plan now. It may be renting another property in the same marketplace, or maybe you go rent somewhere else. Additionally, maybe you move in with a family member so you can save money. Wherever you end up, that has to be part of the business plan that you come up with, and you have to factor in the cost. The other thing to take into consideration is, what if this whole process takes longer than you expect? So you have to make sure that the living situation is going to work for you for potentially a longer time. And number 3 is the timeline. And by the timeline, we mean the whole enchilada. That includes the process of getting your home ready to sell and selling your home. It includes finding the rental, moving into the rental. It includes the time period that you're in the rental until you ultimately buy the next home, and maybe that home needs some work. So you need to figure out a timeline that makes sense for you. It may take longer than you think because it may take longer for the market to drop to where you want to make a change and where you want to buy. So that is very important that you figure out a realistic timeline. This will also factor in, this essentially becomes a carrying cost when you're living in a rental. That's a fee that you're paying monthly. So the longer this takes, the more it eats into your profits. So bear that in mind. If you can live with a relative, that's great in saving on money. But if it takes longer than it should, it may end up having that relationship wear thin. So come up with a realistic timeline on the process and add in some wiggle room for the different parts of the timeline. Number 4 is, what's your strike price? And by strike price, we mean what is the number that you're actually going to bite and buy back into the market. Now, there's actually 2 parts to the strike price. One is the actual price of the real estate in the housing market. And that's an important thing. You need to figure out, what is big enough of a drop? Does it need to be 10%, 15, 30, or even a bigger number, 50 or 60? Then you have to figure out, how realistic is it that it's going to drop to that? Is it possible the values are going to drop in half? And if they do, it'll be a crazy time where there's bigger problems and you may not want to buy real estate. The other side of the strike price is interest rates. If interest rates continue to go up, you may find that it will make sense for you to buy at a certain price before interest rates go higher, because the monthly payments will change. Now, of course, a lot of folks will say if the interest rates keep going up, the prices will just continue to drop. But it is not a direct correlation. So that's what you need to bear in mind as well. So you're going to need to pick a number for the strike price, the actual price where you're going to buy. And then you need to figure out if the interest rates continue to go up, maybe you need to make a strike sooner so that you don't miss out on locking in a lower interest rate if you're going to finance. And we have a bonus, actually, number 5, and that is, what are your numbers? And this is all part of your business plan. That is the way to look at this, that you need to construct a business plan before you make such a big move. So the first part of the business plan is figuring out net cash. And what the net cash will be take the value of your home as it sits and be realistic. You're going to subtract the cost of sale, which typically will be around 6%, including commissions, taxes, etc. Then the next component is the income tax on gain. And this is where you're going to turn to your CPA for help. Just know that you can exclude $250,000 in gain if you're single, $500,000 if you're married. We've done some content on this. But the CPA is going to help you figure out your basis, which is essentially what you paid for your home, plus any major improvements you've done. When you work these numbers together, you're going to figure out whether you owe any capital gains tax. The CPA will give you that number, and that needs to be subtracted from this as well. The last thing to subtract is any financing you have against the home. This is not part of figuring out what you owe in income taxes. This is what is owed to the bank. So what's left over after subtracting those things, that's your net cash. That's what you'll have in the bank that you can hold on to. That's your dry powder. Next part of your business plan will be the costs. So we've already alluded to these. That would be the carrying costs of the monthly rent, for example. There's going to be moving costs, and that's moving into the rental and moving out of it into the new home. There'll also be acquisition costs. When you buy, figure around 1% for acquisition costs to buy the home in the housing market crash that you buy. So you're going to go ahead and have to put these numbers together to figure out exactly what's left over. And that's where you can see that the carrying costs, a monthly rent, that could add up and eat into your profits, especially if it takes a longer time. So go back to the number one question we ask, is what you're looking to gain, and you have a specific answer. And then go into the timeline, make sure it's all going to work out. And at the end of the day, you'll be able to figure out whether this plan of selling now, renting, and buying in the housing market crash makes sense for you. And you'll be able to figure out exactly what kind of drop in values you need for it to make sense and whether that's realistic. Let us know in the comments below if you're going to sell, rent, and buy in the housing market crash. Very curious where you think the numbers will end up for you. Don't forget to subscribe to our free weekly email newsletter so you get updates like this on the housing market crash and more. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.